You surprised by the market reaction? I mean, it's tepid. We've heard a lot today. It's better to travel than arrive. Would you have expected a bit of a rally in equities? Euro down, equities are down, bond yields are falling across Europe.
It's a little bit of a surprise because this is clearly good news for the global economy in France in particular. But if you think about the returns the markets have achieved the last 2 weeks, as you referenced earlier, there's substantial profit made over that last 2 weeks. And so as the event happens, it's not unsurprising to see short-term traders take the profits as the event actually occurs. I think what's more important is what does this mean for a setup going forward? And I think this is an unambiguous positive. You set France up for the important structural reforms that economy and that country needs to grow, and you potentially set the European Union up for a better construct going forward. Clearly, that's extraordinarily helpful. And when you look at the valuations of European and French equities in particular, they haven't been priced for a constructive, healthy, growing outcome, yet the results have been growing.
George, what's the next big event? There always seems to be something in the diary, doesn't it? Before France, it was the Dutch election, Trump, Brexit, so on and so forth. What's the next event you're watching that could potentially be a banana skin, whether it's political, whether it's macro?
So there's several. First is what's going to happen with respect to U.S. regulatory and tax reform. And that's certainly going to take some time to play out. Nearer term in Europe, what's going to happen with respect to the elections in the United Kingdom. That looks like that's going to go Theresa May's way. The Tories will consolidate power, and that will also be a stabilizing influence with respect to Europe. Not only will she be better able to negotiate a better Brexit, but you'll also have more power stability in the United Kingdom, which I think is very helpful. And then I think the one worrying event that's out there on the horizon from a geopolitical perspective are the elections in Italy. They have to have elections by May of next year, and clearly given the strength of the five-star party there, which is a Eurosceptic party, you could again have a question with respect to European Union stability. And I think that's sort of the outlier on the horizon, but really the events going forward seem more constructive than the narrative we've had for a long time.
On that note, George, we've seen the French-German spread come in quite a bit in the last few days. In particular, if you want to have a look at my Bloomberg, you'll see just how much and how far it had reached. About twice what it is now, 41 basis points. Where do you anticipate the Italy-German spread going, and even just regular, European spreads between now and the Italian election?
I think spreads probably converge, continue to narrow going forward. I think the French election was critical, right? It allows a better construct for the European Union to reform going forward and be a better experiment for all of its members, and not have multi-speed economies, and really converge and coalesce into a union that's healthier longer term, because clearly there's some flaws with respect to its construct. So if you've got the potential for a strong Franco-German alliance that helps build a better European Union, that benefits the periphery and certainly should allow spreads throughout the regions to converge to the German Bund spreads.
So what are your trades now, George, now that we have a definite new, French leadership? It might have been priced in, but really until today we weren't sure.
So I don't think it is fully priced in. I think the trade was priced in over the last 2 weeks, but I think the long-term impacts are really underestimated. I think this is as significant an event as when Draghi backstopped the markets or when Bernanke backstopped the markets post-financial crises. This is important. We had a true existential crisis hit the EU, and it's passed with flying colors. Let's remember, 2 out of every 3 French voted for Macron, and he is clearly a pro-European unionist. And so that's extraordinarily helpful. And what that allows is stability from a political and geopolitical perspective. We haven't seen that for a long time. We've seen, and we have the promise for structural reforms to the French economy that could unleash the tremendous power of its people and resources. France, we forget that France used to be a very powerful economy and has only in the last 10 years or so languished. If France can, adopt the regulatory reforms similar to what the United Kingdom did throughout the 80s to fix its malaise, France could be a very powerful economic engine. Let's not forget, it's the second largest economy in Europe. It's a G7 member. getting France to do better would be extraordinarily important, not only for France itself, but for Europe and the global economy. And I think that construct is important and sets up a better Europe. And a better Europe would set up a better global environment.
George, I'm looking at the MSCI All Country World Index in front of me. It's at a record high. European stocks just off a 20-month high. US stocks earlier touching an all-time high, the S&P 500. George, where's the value out there?
So there are a couple things to consider. First, even though the equity indices are at all-time highs, there are differing elements, right? There's a two-speed market. The safety, the bond yield type of markets, utilities, staples, telecoms have done extraordinarily well, where those that are more beaten down cyclical, such as financials and energy, have done much more poorly. That, to me, is the source of better opportunity. And it really comes also from a normalization of rates. As the era of low interest rates starts to subside, the benefit to financials, to energy stocks, to other cyclicals that can better capture that earnings power will grow. And those stocks are substantially cheap, not only relative to their histories, but also relative to the rest of the market.